Welcome to the Daily Insights that matter. The government has introduced a hefty 40% export duty on onions, and this move has a clear objective. This export duty is set to be in place until December. The primary motive is to bring down the recent surge in onion prices. These measures seem to be preemptive in nature. Interestingly, this marks the first time that such an export duty has been introduced. After being in the negative territory since September 2021, onion inflation skyrocketed to a staggering 11.72% in July of this year. This is a significant jump from the 1.65% recorded in June and the minus 20.5% witnessed back in July 2022. This rise can be attributed to a mix of factors, including the disruption caused by unseasonal rains in Maharashtra and Karnataka during April. These rains have led to higher moisture levels in the stored Rabi crop of onions, thus shortening the shelf life. Consequently, concerns over supply constraints have been growing, raising alarms about potential shortages by September. Interestingly, India tops the list of onion producers in the world, having produced 31 million tons in the year 2022 to 2023 period. Predictions about onion prices in the near future have been rather alarming as well. According to a report by CRISIL, retail onion prices are anticipated to hit somewhere between 60 to 70 per kilo next month. Moreover, Ashok Gulati, a prominent agricultural economist, has even gone on record to say that onion prices might surge to as high as 100 rupees per kilo by the end of September. This move by the Indian government isn't entirely unique on the global stage. Other countries have also resorted to such protective measures when it comes to food. For instance, after the conflict between Russia and Ukraine escalated, many nations turned their focus on their citizens' needs first and imposed restrictions on exporting their key commodities. In the words of Union Consumer Affairs Secretary Rohit Singh, this decision to impose an export duty on onion is a well-timed move aimed at boosting domestic availability and keeping prices in check. All in all, this export duty on onions is a clear response to the recent surge in onion prices and aims to stabilize the market before the festive season arrives. The Indian market indices, with those of Nifty and Sensex, have been gaining momentum, hitting highs as foreign investors have been pouring money into Indian equities. On the same lines, India-focused funds witnessed a humongous $3.2 billion of net inflows in the June quarter. An offshore fund is a fund that is not domiciled in India but invests primarily in the Indian equities market. In quarter 2 of 2023, India-focused offshore funds witnessed net inflows of $2.42 billion, the highest net inflows since March 2015. When combined with ETFs, it recorded a massive $3.2 billion worth of net inflows compared to the $803 million in the March quarter. Prior to the September 2022 quarter, these funds had seen 17 consecutive quarters of net outflows. India-focused offshore funds and ETFs are some of the prominent investment vehicles through which foreign investors invest into Indian equity markets. As Indian markets have witnessed robust net inflows and momentum, the asset base of India-focused offshore funds and ETFs jumped close to 20% to $50.6 billion from $42.4 billion in March. Despite a global slowdown and uncertain environment, the Indian economy has been resilient compared to other economies. With that, this is me, Rahul Hassan, signing off. Have a great day and stay safe.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com